Michael Pryor. This section of your course is Financial Integrated Reporting. This falls under the internal analysis and external analysis of your organization. So integrated reporting identifies future strategic value options. If we look at this competitive advantage period model on your screen at the moment, you can see that there's two life cycles. The first one is the smaller circle in red. The larger one is the future life cycle of the organization. So looking down the bottom, we can see we have the current P&L model, and then after that is identifying new trends and ideas. Within your current life cycle, the current P&L model, you know exactly what you're doing and how you're operating. But value is generated through identifying new trends and ideas moving into the future. And by valuing these new trends and ideas, the current value of the organization is increased. So how accounting and treasury can add value? All stakeholder groups are demanding more and more information regarding the overall performance of the entity in the marketplace. There is increasing interest by stakeholders in non-financial metrics. There's also a rise of corporate social responsibility initiatives and a greater interest in other types of capital other than financial capital. And how does this add value to the organization? So again, with this report, we're going to be looking at these different areas of the organization to add value. So at the same time, accounting and treasury can add value by a more efficient reporting process that enables management to gain important insights, and the ability to spot trends and take advantage of market opportunities in a more timely manner. This report also creates more accurate information, more timely information, and ability of firms to take advantage of this more comprehensive information to create more value. So integrated reporting, or IR, the 6 forms of capital within this IR system seek to identify, differentiate, and analyze the following: financial information, manufacturing, intellectual property, human resources, social connections and relationships within and outside the industry, external trends, and taking a holistic view of the organization. So a more efficient reporting process can enable management to gain insights, spot trends, take advantage of market opportunities in a more timely fashion. This creates a circle of more accurate information, more timely information, and the ability of firms to take advantage of more comprehensive information to create value for all of their shareholders and stakeholders. So this report has a strategic and a future focus, and the key items that this report looks at are the business model, the organizational overview, the organization's performance, the external environment, organizational governance, opportunities and risks, the strategy of the organization, the resource allocation, and the future outlook of the industry and the organization. Intangible assets and other intellectual capital. So intangible assets and other intellectual capital now comprise a larger and larger percentage of the marketplace valuation. The ability of organizations to quantify intangible assets is becoming increasingly critical to organizational success. Intellectual capital and human capital, the employees of the company, will undoubtedly play a more prominent role in the determination of corporate success or failure in the coming years as the economy shifts to a more knowledge-based economy. So a question: what intangible assets and intellectual property are owned by your organization or your client's organization? So take 1 or 2 minutes to think about this and make a note of what you think these assets are. Then we have to think about protecting these intangible assets. The three below can be combined to add additional security. So the basics are a trademark. You can trademark the brand name, advertising slogans, the shape of a bottle, a patent, the process or formula to make a beverage, for example, or copywriting the package or advertising materials. Most companies combine two or three of these together to reduce their risk factors. Corporate social responsibility. Several areas in which CSR could impact the profitability and success of the firm are as follows. An increase in brand equity value due to a positive image. Other intangible asset creation due to CSR. Successful engagement with stakeholder groups, which can be the local community, the local government, the local city, as an example. Improved internal governance, superior financial performance due to improved governance and stakeholder engagement. An increased market position and favourable opinion could lead to lower borrowing rates. And better reputation could lead to new business opportunities. So those are the benefits of incorporating a CSR report within your overall report. Financial. Traditional financial reporting has focused on traditional metrics, such as the return on equity, dividend yields, free cash flow yield, net income, earnings per share. The focus of financial reporting provides invaluable information to the management of the company, to potential investors, and to analysts that provide market coverage of the organization. As recent market events have demonstrated, however, focusing exclusively on this type of information can lead observers astray when it comes to performing a more holistic evaluation of the company. Traditional financial filings focus primarily on financial results from the operations, units sold, market position, albeit in a narrative format as opposed to the quantitative representation that is included within the financial statements. The summary that's included in an IR, however, gives a much more comprehensive view of the operations of the business. In addition to focusing on the operations of the company during the period in question, IR also mentions the external environment and the impact that it has on the company's financial results. In the rapidly changing global economy, this additional analysis of the external environment can provide invaluable information to potential investors and to financial analysts, and can provide management with pertinent insights into the future. Risk management. This should be included in any financial report, but in this case, risk management is another area that can play a prominent role in shaping the IR process and helping deliver value to the company. By leveraging the understanding of financial metrics, market conditions, interest rates, and pending financial regulation, it is logical to envision employees having valuable input regarding the risk management objectives of the company. This is to do with frontline management, understanding and getting input from your frontline employees. Strategy and risk management go hand in hand, and both are given much more analysis in the IR format. The ability of personnel to help analyze and scrutinize strategic initiatives through a financial lens that might lead to more successful rollouts. And again, using your own frontline personnel to analyze your strategy also adds value to the organization. So a blueprint for value creation. The first thing is leverage existing and develop new synergies between accounting and management functions to develop tools and metrics to help deliver more real-time and comprehensive analysis to management. So this is synergy between accounting and management. Next is research. Analyze and develop tracking and valuation metrics for intellectual, human and social capital, and do this both on a current basis and looking forward into the future. Utilize existing knowledge of market conditions and the impact of CSR initiatives to help develop models and projected benefits of undertaking projects. So this is to do with scenario planning. Look at different scenarios where CSR can help you and add value. Implement initiatives to improve risk management and strategy at an entity-wide level to bring enhanced financial rigor and analysis of strategic plans. This is to do with what if this happens. So this is linked to the scenario planning that we talked about in the previous slide. Assist management and investor relations in the development of IR integrated financial templates that successfully highlight and emphasize all aspects of financial and non-financial performance by using analytic and detail-oriented abilities already present in both departments. So again, this is looking at a combination of financial and non-financial performance and intellectual property. So some of the benefits are by incorporating real-time insights of financial treasury personnel, as well as benefiting from the insights of accounting department regarding the impacts on financial reporting and compliance. The creation of entirely new KPIs the IR process will help the company identify and add value and track performance comprehensively. So real-time insights allow you to make real-time decisions. Data shouldn't be about analysis. Data should be about understanding what to do next. Real-time metrics are immediately actionable and equip you to make optimization decisions faster. So again, it's looking at what's happening today at this moment, not so much in the past, but what's the data you're receiving today and analyzing that will affect the future of the organization. So the question for this section is, what are some of the positive outcomes that can be achieved by including a financial integrated report as part of your organization's strategic plan?